Hey guys, today we're going to be talking about salary sacrifice and superannuation. I'm Emmanuel Saris from Australia-wide Tax Solutions, and over a coffee yesterday in the office, a girl was saying that she's salary sacrificing into her super to get her first deposit on her first homeowner buyers. So the first homeowners is still going on as an offer, so you may want to take that up if you are a first homeowner buyer. And the good thing is that for the last 5 years, apparently you could salary sacrifice into your super, and then after 2 years, because you can only take out $30,000, you can place that on a deposit for your first home. So I think that's a great idea. I don't really recommend salary sacrificing super unless you're about 50. However, in this particular instance, with the first homeowners grant and the first homeowner buyer savings plan, I think it's a great idea. So if, for example, your employer, say you're on 100k a year and your employer is putting $9,500 in super, your maximum is 25,000 minus the 9,500. So that means the remainder can go towards your deposit for your first homeowner's property. So there are a few clauses that you have to abide by, and if you do withdraw it, it must go towards the first home. If it doesn't, then you have to pay back that money into your super, which means you won't be able to access it until you're 60 years of age, or until preservation age, maybe 65, 67 years. So that's why I don't recommend it. Unless you're about 50 years old, then salary sacrifice into super. And most employers, probably 99.9%, do salary sacrifice into super. We will be talking about other salary sacrifice events that you can take up, especially for those people working in the public sector, public benevolent institutions and not-for-profit institutions. You have really good salary sacrifice options to take up. So let's just recap on the salary sacrifice for superannuation for first homeowner buyers. So that means that if you salary sacrifice up to the cap to 25,000, so hypothetically, if your boss is putting in $5,000 of super, because that's what you're entitled to, you're able to put another 20,000. So instead of paying tax on the income you were going to receive, this is tax-free. However, once it goes into superannuation, it is taxed at the superannuation rate of 15%. So just be mindful of that. So if you're under the threshold, if you're under the 15% threshold outside of super, there's no point in doing it, because you could just save the money and put it into your bank account. Now, you have to have genuine savings outside of super as well, so in order for you to access that 30 grand, and usually about after 2 years you can access the $30,000 to put towards your first homeowners. So guys, if there's any questions about this type of salary sacrifice arrangement, give us a call on 8052 3332. This is Facebook Live. We will put it on all the other mediums of social media, including Twitter. So if you follow us on there, if you follow us on LinkedIn or Google Business, you can see us, you can see this video. So this is a live video happening right now, right here in the car as we are going to work. So if there's any questions on that first homeowners grant and anything to do with the salary sacrifice for superannuation, please let us know. Thanks, and we'll be tuning in tomorrow this time, same time.